you ever faced sharp price changes while trading? In this video, we will dive into one of the most dangerous reversal patterns that can predict a market trend shift. If you want to take advantage of these opportunities for profit, stay tuned. Now that we have discussed sharp price changes, let's take a look at one of the most dangerous reversal patterns that can predict a market trend shift. In this pattern, we first draw an impulse move followed by a correction, which indicates a decrease in the power of the trend. This pattern usually forms at the end of a trend or at the end of a channel. The key point here is that after the impulse move, we notice a decrease in buyer strength, which signal a potential trend reversal. As you can see, this pattern is called an ending pattern because it represents the end of a trend. So, how do we trade with this pattern? Here's how. The entry point is at the end of the correction in an upward ending pattern. The entry point will be the last valid low in the correction phase, and in a downward ending pattern, the entry point will be the last valid high in the correction phase. A stop loss is placed just above or below the correction, and the target is determined based on the distance from the entry point. This creates a complete trading system. For setting the target, we have two options. One is the channel bottom, and the other is a static support level or a static resistance zone that may be considered as the target. These are taken as the first and second target levels. In the remainder of this video, I will show you examples of both scenarios on the chart. This pattern also provides us with two important confirmations. The first is that during the correction phase, we typically see a regular divergence in the MACD indicator. The second confirmation is the decrease in buyer power, indicating reduced buying strength during the correction phase. It is essential to note that these patterns must be ideal. Ideal patterns are highly important, as the markets are full of various patterns and formations. Our job as traders and analysts is to distinguish ideal patterns from non-ideal ones. The criteria I provided are key items that will help you identify ideal patterns. In this video, we will focus solely on introducing and identifying ideal patterns. In future video, I will dive deeper into specific ideal patterns and how to trade them. In continuation of what we explained earlier, I will now show another example using paint. Here, I have drawn another impulse and correction move, and I want to point out a very important detail. The key to an ideal pattern is the proportion of the pattern. This means the pattern must be proportionate. By proportionate, I mean the impulse move and the correction must be in balance with each other. If the impulse move is much longer than the correction, or if the correction is too short compared to the impulse, the pattern will not be ideal. There must be a balance between them for the pattern to be valid. Additionally, in these patterns, we typically see a regular divergence in the MACD indicator, indicating a decrease in trend strength. In the future, I will be posting a full tutorial on how to use the MACD indicator and understand its signals on my channel. As you can see, we have identified a bullish channel with price moving upwards. Upon reaching the top of the channel, we observe an impulse move followed by a corrective move, which forms an ending pattern. The key indicators of this pattern are the decrease in buyer power and the regular divergence seen in the MACD, which suggests that while the price is increasing, the MACD fails to confirm this, hinting at a potential price reversal. Once the price triggers our entry, it begins moving toward the bottom of the channel, where we set our target. We place the target at the channel's bottom since our static support is below it in this case. The price then beautifully touches the channel's bottom and our target is almost hit, giving us a profit of 2.64R from this trade. As we can observe, we have a bearish impulse move here, followed by a correction. This correction signals a weakness in the selling pressure, indicating a possible reversal. After this impulse move, we notice the market showing sign of weakening. We can expect a potential reversal because the strength of the sellers is diminishing, which is further confirmed by the regular divergence in the MACD. This divergence gives us another clue that the price may start reversing. Based on this, we are forming an ending pattern. Now, with the identification of this ending pattern, we processed to determine our entry trigger, which we had explained earlier. In the case of a bearish pattern, the valid entry point is the last high that formed before the price made a lower low. Once we have established our entry, we set our stop loss below the last valid low. Our target will be placed at a strong resistance zone. Why this resistance zone? Because this level has been defended numerous times, and the high number of twice and rejection here confirms that it's a key level. Therefore, we place our target at this zone, where we aim to capture significant profit. As we have seen in this example, we can achieve around 2.56R in profit, which is an excellent result. This is powerful trading system, especially when we enter a position based on an ideal ending pattern. The important takeaway is that the ending pattern is a very powerful trading strategy, but only if you can consistently identify ideal setups and avoid non-ideal patterns. The key to success is to regularly study charts, practice diligently, and train your eyes to spot the ideal patterns. With this, the trading system I have shared can lead you to the best results in the market. Important points. Pay attention to the proportion between the impulse and correction legs. Confirmation signals like MACD divergence. Set the entry trigger after the complete formation of the pattern. Place the stop loss below the last valid low or high. Set targets based on strong support and resistance levels. Common mistakes: entering too early before the full pattern is formed, ignoring confirmation signals like divergence, not considering the proper balance between impulse and correction legs, using incorrect targets that don't align with strong support and resistance levels. Don't forget to like and subscribe, and leave your comments or questions below. If you have any questions or uncertainties about the patterns, be sure to ask them in the comments. Practice and stay tuned for more educational videos in the future.